So it's 10:30 here. I'm actually not feeling well at all today, so I was really just woke up. Taking a look at what we have here. Let's get this out of the way. So we're done for the day in gold. That's down 140. And then in oil, up 100 booked, and oh, interesting. So we got long here, and then we really pull that stop tightly, and we get taken out really where we wouldn't have liked to. Then got back in, and now taken out on the 15-tick trail. So up 240 there. What happened earlier? All right, so a short here. So again, this is kind of what we've been talking about. A short here, where if you trail big, you just scratch. But by trailing tight, we make 10 there. And then here we give 8 back. So there's a 7-tick stop. So we took a slippage there. And then here, this is kind of what we're looking for, right? Where you get in and the market just pops your way and you trail that stop up tightly behind you. In this case, when I see that, I don't like that, and I feel like I got lucky that I then got another signal to get in to catch the next piece. Because really, your expectation is you get in here at 51.12 and you're going to get taken out at 51.39 on that pullback. All right. So really, it's like you took 2 trades there to make the same amount. Really, there's an extra trade, so an extra commission cost. I wish I felt better. Okay, so we're just going to let this go now, and looks like Euro didn't take any trades last night. So we start here. And I don't have the codes putting in, just these little dots to show when the system is looking. So there was some opportunity here, for sure. And then we nicely stay out of trouble here, so that's good. But this is really academic because it's going to change this weekend with the new model and a new analysis. All right, so here we are at the end of the session, and I think that last trade we showed live here was the last one taken, because we ended up plus 240 in oil, and of course we were already stopped for the day in gold. Let's take a quick look at oil, and then we'll review the week. Let's see. Yeah. So we talked about this already, how we got short here, and because we're trailing so aggressively, we actually make something here instead of nothing. So this whole business here then ends up netting out, basically, this loss here. Whereas before, otherwise that wouldn't happen, right? You'd be scratch here and then negative. So we get long here, and again, I struggle with this, with what happened here, because we're trailing so tightly that we get taken out when I really think we shouldn't. And yet, the data clearly shows that you're better off doing it this way. When I look at this, I feel like I got lucky that I got that signal, and then managed to capture sort of the rest of that move. Anyway, it is what it is. The data is pretty clear. The next ML update webinar we have, I think I'll probably have that program ported over to the Windows platform, so I'll be able to show it, how we go through changing the trade parameters to see kind of what works out. And the net result is that there's enough of these little moves like this that it's basically equivalent to giving the market more room to work. It's interesting. So I want to see it live though, because a lot of times you know when you're dealing with 100 days of data, which is what I'm replaying, stuff can get lost in the multitude. So we really need to examine it in more detail. Is what you'd like to do. That's hard to do and cover as many markets as I'm trying to get out. So we'll look at it in real time here, and this is a data point for me. What I see right here, and yet as it turns out, it's about the same. So maybe that's what's happening. And then nothing else here. So let's see. You can see right here. Now this is kind of key, I think. We are. Every bar that's orange means that the system is looking for an opportunity. So we come back down to the value area high, and to me this is exactly the right place to be looking. You've got this move. If you fib people are going to be understanding exactly. Yeah, this is where to look. We don't see anything, or rather, the machine doesn't see anything in the price action and order flow, and we kind of rotate around that, and then the POC comes up here because we've spent so much time at this location, and so now we completely stay out of trouble because we don't do anything when we're near the POC. So that I like what I'm seeing there, and then we fall through and we get an opportunity here. Okay. There's nothing there for us to do as it happens, but it's the right thing to be doing. So I like the way that it's working in terms of you broke through this resistance level here, and what's sort of underneath that resistance level is that a support level. I'm sorry, is that low volume node. That node is a low volume node because we can't get down there. And so then when we get down to it, now we start looking, okay, what are we going to do here? Either the market's going to hold and we're going to bounce back up to the POC, or it's going to fall through. As it happens, it falls through. And we get another shot at it right there, right here, as it pulls back. So again, I like that. That's exactly what I want. So given the way that we're identifying the locations well, it allows me now to focus more on the architecture of the training the machine learning system itself, to improve that. Okay, so with that in mind, let's actually, I didn't see what gold did. Let's see what happened in gold. Okay, so it's all right here. 7. So here's the gold open. We fall. We're outside the value area, which is why there's all this background striping. So we don't, we won't go short. We won't go short in here because the way the chop avoidance works, not until here is it considered legit. And then right again, no, don't do it. And now don't go either direction because it looks too choppy and sideways. So finally we break out of that. We get back inside the value area because the value area low drops down. Okay. So we only do this chop avoidance when we're outside the value area. When we get inside of it, then we ignore that chop avoidance, and we use the location of the point of control and the low volume nodes to help us make the choice. So in this case, we come back up to this low volume node here and then want to go short. That looks like a perfectly legit trade to me. Yeah, so you fell, you tried, try again, short it. So that's reasonable. And then, but the market's going the other way. Now what's interesting here, okay, the market is, we short it again and take a loss. What's interesting here is that these are breakout long codes that the analysis has shown tend to be false. So that's kind of interesting. Let's see what would have happened. So this one would have, so if we got long here on this code, that would have taken a loss. And then what about here? No, this one would have hit. Okay, so we would have taken a 7-tick loss on the first one, and the second one we would have we'd get in right there. 1, 2, 3, 4, 5. Yeah, so we'd survive this little pullback, and then we'd catch some amount of this move here before it pulled back. Oh, that's interesting. Okay, and let's see. And then, boy, it was pretty quiet after that. This is 9 o'clock right here, and then here's 1 o'clock, 4 hours later. So not a whole lot going on there. All right, so let's look at the weekly results. So trade activity log, Monday. Yeah, so 11:26 through 11:30. CLF9. This is the live account. Okay, so it's the live account, not the sim account, right? And the running P&L, it's this column here. I was looking at the wrong column the other day. There's plus 500 in oil for the week. So this first day was a max loss day, minus 160. So I'm willing to lose I'm willing to lose 140 is what we're doing now. Let's make sure that's correct. That's set to 150. That's actually set too high. So it's set for when I was using 10-tick stops. I need to fix that. This too. All right, so for members, let's go through this. If I'm willing to take 2 losses with a 7-tick stop, that means $140. Okay. So each trade is $70. So really, if this max trade loss field here is like a safety net, it's an oh shit, something bad happened and I didn't get out of the trade like I should have. All right, so that should be 1 or 2 ticks more than the normal stop amount. So I always make it like 2 ticks more, because 1 tick of slippage is kind of normal. I don't want to execute that system unless something really bad has gone wrong. But it doesn't matter. 80 would be fine too, because $70 is the amount that we're risking per trade. So 80 or 90 would be fine. Okay. This is a little bit different. So the way to understand this logic, the system goes, am I allowed to take a trade? That's the question it's asking. And what it does is it compares how much you've lost to this number, okay, that day. So if I'm willing to lose $140, then I really don't want this number to be 140. That would be kind of intuitively what you'd think. Maximum daily loss is 140, so put 140 there. But that's not what would happen. You would not get the result you'd want, because you could be down, say, $130. So you've taken a couple of, a trade that lost money, a trade that made money, and then another trade that lost, and now you're down 130. The system would go ahead and say, "Oh, I can take another trade if this says, if that says 140." But what that means, if that trade loses, then you'll end up down 200, which is more than you want. So really, we want this number to be an amount that is more than the actual math would probably confuse people. You want it to be a little bit more than 1 less than the number of losing trades you're willing to take. That's confusing. If you're willing to take 2 trades, that means if you're willing to take a loss from 2 trades in a row, so that's what we're talking about here. 7 ticks, $70 per trade. I'm willing to lose 140. So typically what happens is you just, like in gold today, you take 2 in a row and you're done. But sometimes it doesn't, right? So really what that means is I could actually make this number, say, 80, or 100 might be smarter. Because if I take a loss, now I'm at minus 70. All right, I've lost $70. That's still less than 100. So the system will stop trading once I lose $100. So this would probably be a better number. That gives me some room there if I end up taking multiple trades, and I'm still willing to trade if I'm down $90. Do you see? Once I get down $100, it's going to stop. All right, but if I'm down 90 and I take a trade and it's a loss, and that's $70, then my max loss for that day will be 160. I'm willing to lose 140, so that's about right. If you wanted to get super careful, you'd put it at 80, one tick more than that one loss. The problem with that is that slippage can get you, and it can stop you out when you really don't want to stop yet. So this is more correct. All right, so with a 7-tick stop. If that's confusing, then send me an email. You probably need to figure out a way to make that a little bit easier to understand. All right, so there's oil plus 500. And then in gold rolled over, so we have to look at two of them. Let's see which one I have listed up here. Trade activity log. Okay, so that's Z8, and again, this is the live account. It's not the sim account would look like that. Okay, so GCZ8 was running P&L was 390 through Wednesday. Okay, so we had Monday was scratched down 10. Tuesday took one loss, and then Wednesday we really kind of cleaned up. The other thing we should look at is the number of trades. It's not a huge number, so that's kind of important because you need to factor in costs. So sometimes you'll see, I made $500 this week, but you took 50 trades to do it, and you end up paying, you're giving all that profit back in costs and commissions. So this is a very reasonable number of trades here. Same thing here with gold. You took one trade on Monday and scratched. You took one trade on Tuesday and it was a loss. And then on Wednesday there was a lot of activity. You took 5 trades and made $450. All right, so 390 through that contract. Then we have to look at G9. We rolled over, and then we made 100, and then took a minus 140 loss. So minus 40 total for that contract. So for gold for the week, it's 390 minus 40, which is 350. So 350 plus 500 is 850 on the week here, trading these two contracts. All right, so that is it for this week. I'm gonna implement Rev 71 for the euro next week, over the weekend here. So that'll go up. Those models will go up for members, and then when I send out that message, I'll include the code. Actually, because it's the first Rev 71 for the euro, the chart book and spreadsheet will go up, and you can just grab that. You have to change change it for your time zone if you do that. Otherwise, I'll also just include the codes to use for long and short. And then I want to redo the analysis for gold, so I'm going to try to get that done. So the gold codes might change. So if that's the case, I'll put those out. Though the reality is, members don't have Rev 71 yet. You're still on Rev 70, so you should probably stick with what you have. I'll make that clear. I'm going to burn in Rev 71 for another week, and then release it. So next week we'll put out Rev 71. Just to make sure there are no errors, since I wasn't here to check like I would normally thoroughly check during the week in the evening. Okay, so that's it for this week. Take care, and I will see you on Monday.